business. If you're like most of us entrepreneurs, increasing your profitability is always on your mind. And you're probably looking for ways to grow your revenue while growing your company. Well, you found a great podcast that shares ideas to do just that. I'm Marcia. I'm a business growth strategist. I've helped tons of small business owners to establish and implement a tangible plan that guarantees increased profitability, guides your growth, and plans for a future exit. Building a highly profitable and sale-ready business creates a win-win scenario. That's more money now and a windfall when it's time to let go. And I like to share strategies that I've learned with you on today's Profit with a Plan podcast. But before we get started, I have some great news. I've released my second book called The Profit Accelerator, and I'm looking for a few business owners to interview in the next month or so about how my book's 12 strategies would impact your industry. Go download my book for free and let me know if you'd like to be interviewed. It's available right now for the next few weeks while I'm interviewing business owners. I'm confident that these strategies can help any business to increase their revenue, profit, and the value of their company without having to pay for additional marketing or advertising. Go pick up a copy at trajectoryprofits.com/book-download. Okay, I am really excited to have my guest today, Jonathan J. He's been an entrepreneur since dropping out of the university at the age of 19. Now, 50 years old, but you can't tell. He has built businesses in publishing, digital marketing, adult education and coaching, and preschool education, and he sold every one of them. During the pandemic, he made 48 acquisitions to create the fourth largest group in his sector in under 3 years. One notable deal was had him buying a €5 million €5 million annual revenue digital marketing company from its private equity owner for just €1, and then turning around and selling it for 1.3 million in just 11 months. So he's an advocate of health, work-life balance, suffering mental and physical burnout, and believes that you can achieve success without business taking over your life. If I can get my mouth to work, we would be really good with this. And now he helps other people buy businesses and helps them avoid the expensive mistakes. And he says he's made them all. So Jonathan, I'm so happy to have you on the podcast today. Welcome to Profit with
Thank you so much. Thank you so much for having me. It's great to be here.
Yeah, wow. What an interesting life that you've led, that you just buy companies. You know, listeners are probably thinking, he's a millionaire. He can do all these things. But sounds like you come from grassroots, right?
Yeah, everyone has to start somewhere. In fact, all the people that I help, the majority of the people that I help, don't really have any savings or any credit. So we have to be more creative. If we're going to buy a business, we have to do it the smart way and use other people's money if we don't have any of our own.
I love that. That's one of my favorite leverage tools is other people's money and other people's time. So that's fantastic. All right. So Jonathan, tell us, you have a fantastic accent. Where are you from right now?
So I'm from London, and I'm joining you from West London right now. We're in the cold and wet, very cold and very wet.
Well, we're expecting here in California 78 degrees on Christmas, so we have beautiful weather to offset yours, but it's fantastic. All right, great. So how in the world did you get into selling businesses? Now, you mentioned that you bought and sold, but what was the leading driver for that?
Sure. Well, it was completely by accident. So I had a magazine publishing business in the 1990s, and it was a very small business. There was just a handful of staff, and I didn't really make much money from it. I mean, some months I made a profit, some months I made a loss. I mean, it wasn't a great business. And I was very close to just closing it down because it was stressful, but it wasn't very rewarding. And then someone came to me and said, "We'd like to buy the business." Now, I'd never thought of selling it. I never thought that someone would want all the hassle and problems that I had. So we did a deal, and I made more money the day that I sold that business than I had in the previous 2.5 years of owning it and running it. So if I just say that again, because I think it's a really important point.
That's
I made
huge.
money the day I sold it, that in 2.5 years of all the stress of turning up to the office, working at weekends, all that, just that sort of chaos of running a business. And it all went away. Plus, I got paid at the same time.
Wow. I love it. That would be an ideal dream for a lot of business owners. And part of the things that I coach to is that you're building this asset, sell it someday, plan to sell it someday. So
Sure.
one of the things that is kind of curious, has got me curious, is why would you make more money now than you would have done before? Were you on the edge of doing something, or was there a lot of value in the asset?
Yeah. So even though the business wasn't very profitable, it had a strategic value to the acquirer. And the
Mm,
acquirer wanted our database and also saw the magazine as a method, well, one particular magazine in the group as a method for promoting their own products and services. So they saw a value above the profit that the business was making at that point. And I've got to say that, you know, if it hadn't been a strategic acquirer, I don't think I would have sold it. I don't think it had that value really.
sure. They would have saw your struggles and went, forget it.
Yeah,
But
exactly. And as you know, that's the challenge with lots of smaller businesses. They're not really big enough to be interesting to someone else.
right.
They work as a lifestyle business, but they don't really work as a business that's saleable. So the fastest way, I think, to make a business saleable is to make it bigger and more profitable. And the fastest way to make it bigger and more profitable is to go and buy another business and put the two together rather than another 10 years of hard work, do it in the next 12 months.
Love it. And that's a really good point, because if you think about it, this company that bought yours, we'll continue on that example for a little while. They had a need that would grow their company. Maybe they even wanted some of your losses, or the problems that you had to balance their company, but they saw something that was already built and running that they could acquire to complement what they're already doing.
Yeah, absolutely. So when you buy a business, you're buying a system for selling a product or service. So you're buying
Mhm.
the marketing system that they've got, you're buying their financial system, you're buying their supply system, you're buying their manufacturing or whatever it is that's being made and created. And also, more importantly than anything, you're buying cash flow. So
Mm.
when you buy a business that's a positively cash flowing business, from the moment you own that business, that positive cash flow is yours. So there is a school of thought that says that you should go and buy a struggling business and turn it around and turn it into a success. Now, I've done that and I've done it successfully, and I've done it and I haven't been successful. So it's hard. It's because it's hard work. It's far easier to buy a business that's currently making money and then carry on allowing it to make that money once you own it.
Right, but there's got to be a difference in the value that you're buying. So I'm sure you're the one you bought for €1 and sold for 1.3 in the introduction was one of those struggling businesses. Whereas, maybe we business owners don't have $1 million we can throw on another business, even though it's cash flowing, because it may take a couple years to catch that money, right?
Okay, so there's several things there. Um, First of all, if a business is for sale for $1 million, you do not need $1 million to buy it. You know, we understand when we buy our property, when we buy real estate, we get a mortgage for the majority, and we only
Mhm.
put in a small percentage of cash. And it's a little bit like that when buying a business, but it can be even better than that, because we can actually fund 100% of the deal using other people's money, so that we don't have to put any of our own money in. So we can buy that $1 million business for $1 million, but it's not our $1 million, which is always helpful because if you don't have $1 million, that's the only way you could do it. And it's the smart way of doing it. Why not use other people's money rather than your own?
Love it, love it. But then going back to if you're buying a distressed company at a fraction of the price, or you're buying a profitable company with the cash flow going, when do you start to see break even on that?
What when you buy the distressed business?
Well, when you buy the distressed business, you got to put all your sweat, labor, and time and stress into it to turn it around and get it.
Yeah.
So I would imagine that that's got a much longer runway
Yeah.
for you to
And
turn it profitable.
yeah, and I would advise against it. I would
Perfect.
say never make your first deal a distressed business. It's something for the future, but it's certainly not the first one you should do. I mean, why make life more difficult for yourself? Buy a business that's already making a profit that will still make a profit once you own it.
Well said. So we'll kick that once in a lifetime chance of making something and turning it into gold
Yeah, I
away.
mean,
But
it can happen, but I mean, it's a gamble, and I don't like gambling. I want a sure bet, and a sure bet is buying that solid, profitable business.
well said. Okay, so when we're looking at profitable businesses, at least here in the States, the aging business owner in the smaller companies that are still running profitable is is hitting a ceiling. They want out, right? So there's lots of opportunities, I think, for the smaller companies out there. How do we go about finding one?
Okay, so there are business brokers who
Mhm.
advertise, list businesses for sale. They're like realtors for business. And I would actually say that's not where you go. It may seem the obvious place. They've got a list of 100 businesses for sale. That's the obvious place to go. I don't think it should be your first place to go. Let me explain why. When a business is listed for sale with a business broker, the business broker has put a value on that business that is usually flattering to the vendor because they want the vendor to sign the sales agreement with them. And they're not going to look at the business and say, oh, well, I don't think you're going to get very much for this business. They're not going to say that because then you're not going to sign the sales contract. So they're going to say,
Mm.
oh my goodness, what an incredible business you've got here. Oh, you're going to make $1 million from this. And you'll go, fantastic. Why do I sign? So the first challenge to overcome when a business is listed with a business broker is that the vendor has an overinflated sense of what that business is worth. And
Sure.
means they're harder to negotiate with. Certainly
Mm.
at first, when the business is sat on the market for 2 years and no one's bought it, then they start to soften a little around the price. The second reason we don't go to business brokers is that business brokers, by virtue of advertising the business, are going to have several people interested in that business. So now we've got competition. And competition isn't a good thing when it comes to buying a business because it pushes the price up. And you're
Hmm.
in overpaying for something or paying more than you would have done if it had just been you as the only person interested. So competition forces prices up. A little bit like when you're viewing a property and the realtor says to you, oh, we're showing 3 more people around today, a lot of interest in this property. You want it more. You want it more, and you push your upper limit on your price because you don't want anyone else to get it because you
Right.
want it. And the third and final reason why we shouldn't go to business brokers is because business brokers are professionals. And if you are buying a business for the first time, you're not a professional yet. You are now in a very weakened position because you're negotiating against someone who does it for a living and you've never done it before. And I represent
Mm.
this, and I want my buyers to be as successful as possible. And you don't want to go and sit in front of a professional when you've never done it before, and this is your first time.
Got it. Got
We
it.
don't go to business brokers. What we do
Fantastic.
is we go straight to the vendor. We go
Okay.
straight to the owner. How do we find the owner? Well, we do it the old-fashioned way. We write them a letter.
Oh.
But we don't just write one letter, we write hundreds of letters because we don't know who woke up that morning thinking, you know what, I've had enough of this business. You don't know who is reaching retirement age. You don't know who is feeling stressed and just wants out. We don't know.
Mhm.
So we've got to send out hundreds of letters with our phone number on, and we see who phones us. And the people who phone us are the people who are interested in selling. So they self-select, they raise their hand and they tell us that they are interested. And that is the start of the entire process.
I love it. And you know what? It is a very emotional situation for a seller They literally wake up one morning and they're like, I am so done with this.
Yeah.
I want to be done right
I've
now.
done it
And
myself.
then here
I've
comes
thought
your
that.
letter.
Yeah, I remember I had a very good business. So it was a really good business, and I was getting very frustrated. I had staff problems. Everything happened on the same day, and I remember saying to someone, "Yeah, I just I just closed it down. Let's just close the whole thing down. Not interested anymore." Which was ridiculous. I mean, all I needed was a good night's sleep,
Right.
and I woke up the next morning full of enthusiasm again.
Wow, wow. Okay, so it is really just that simple. And obviously you want to do it for the kind of business that would potentially complement yours, or would you do it in a totally different space?
Okay, so if you own a business already, the most common sense thing to do is to buy a business that's similar to yours so you can combine the two and make a bigger business. Maybe it's a business that's similar to yours in a different location, a different part of town, or maybe even in another town. So I've got clients who are growing a network of businesses by buying, the one I'm thinking of at the moment is pest control. So buying pest control businesses in each town to create this regional network. Now, if you're not in business at the moment, and
Okay.
some people listening to this might not yet be in business, but see this as a very fast way of getting into business, faster than starting one from scratch, then the best thing to do is to stick to what you know, what you understand, and what you can learn quickly. So let
Mm.
me give you an example. I have not got a clue when it comes to technology. I mean, oh my goodness, I have my remote control, my TV. I've got like I can do the on-off button and I can do the volume up and down, but there's loads of buttons on the remote. I don't know anything about technology. Okay, so for me to buy a technology business, I wouldn't know whether it was good, bad, or indifferent. I
Right.
don't have a clue. So that would be a silly thing for me to do. So I might as well stick with what I know. What do I know? Well, I know education. I know publishing. I know digital marketing. So I always stick with things that I know and things that I
Sure.
understand. And that is the very best advice I can give anyone listening to this who hasn't yet got into business. Buy something you can understand. So I've got a group that's starting in London in January, and every single person in that group is going to buy a business in the next 12 months. Okay,
Wow.
every single person. And we've got an agreement that we're going to choose one sector, and everyone in the room is going to buy one business in that sector, and
Mm.
we will put them all together, create a big business, and then sell it. And the
Oh,
sector that's got the most votes at the moment is laundromats, is
oh,
automatic laundries. They are pretty automated businesses. They're reasonably low maintenance businesses. There's low
and
number
high
of
cash
staff,
flow
and they have positive cash flow. In fact, you can look at the app on your banking app on your phone and see the money coming in every hour.
in
Uh,
quarters,
yeah, exactly.
in
Yeah.
coins.
So there's going to be 25 people I've got together in this group, and we're going to buy 25 laundromats. I'm going to put them together. And we're going to sell them to someone who wants to buy 25 laundromats in one go. So the point I'm making with this is that it's a simple, straightforward business. We can get our head around. Yeah, we don't have to spend 6 months learning how this business operates.
Right. Wow. Okay, so you make it sound so easy. I mean, come on, it can't be that easy, or everybody would be doing it. So there's got to be some sort of strategy that you do beyond having it simple and cash flow. And I love the way that you're combining business owners together and do that. But there's all these roadblocks that come to my mind, first of all. Maybe like you said, you got to know the company or the industry that you're in, but where are you going to get the money? Where are you going to find these people? I mean, it just seems so difficult. Is
So
it?
the finding people who want to sell businesses is actually really easy. Everyone starts off thinking that is the hard bit. That's the easiest part. It's very
Okay.
easy phone to ring for people saying, I got your
I'm
letter.
good.
Can you tell me what it's all about? The harder part is assessing the value of the business,
Mm,
because quite often the seller has an emotional value because
of
they've
course.
worked there for 20 years. There's 20 years of work and they don't want to let it go for nothing. But we've got to be sensible about the valuation of the business. So we've got to reach a value. And then we've got to say, how much does the seller want for this business? You see, business brokers will want you to make an offer. Now,
Mm,
it sounds makes sense because when you go and view some real estate, you put in offers, don't you? Well, that's the worst thing you can do with a business, put in an offer. Because what if you put in an offer that was more than the seller was willing to sell for? You've just wasted money. So I always find out what the vendor, the seller, the owner of the business wants first, and then
right.
I work on that. Because you might be quite surprised sometimes how little they do want. Because if
Hmm.
they retire in 6 months' time, they're stressed by the business, they hate the staff hate them. They might say,
Mm,
look, well, I hand you the keys, just take it. I don't want it anymore. You don't know until you ask.
right.
Now, that actually does happen, and it happens more frequently than you'd expect. But let's say we need to get some money together to give to the
Right.
owner.
That's the next problem is where do you find the money once you figure out what the value is? And I'm sure you bring in professional people to help you value that company. You're not
Yeah,
just doing it all on your own. But you're trying to avoid all the middlemen that you can in there. So
yeah.
I like that
You
idea
should
on it.
always have your CPA, your accountant, and
Right.
your attorney.
Advisors.
Absolutely.
Yeah.
This is not something you should do just by yourself. It's too important to do it just by yourself. There's too much that can go wrong to do it all
Right.
by.
Okay.
But when it comes to financing, I've got my sort of go-to methods. If the business has assets, then what we can do is that, and when I say assets, I mean machinery,
Hmm.
property, real estate. Yeah, it has
Or in your
physical.
example, the laundry machines and the suite that they're in.
Yeah, absolutely. We can actually get finance using those items as collateral, and we can use the money raised by that finance to pay the owner of the business. So it can fund itself. Likewise, if a business sells to other businesses, so they sell B2B,
Hmm.
then we can, and that business, will send out invoices at the end of the month that are paid in 30 or 60 or 90 days. We can actually get finance against those outstanding invoices. And we can sometimes borrow up to 90% of the outstanding invoices. And we can use that money to give to the vendor. And then the advance that we've received from the finance company, the loan, if you like, is paid off when the customers pay their invoices. So
Okay.
it's a really simple way of doing it. We can also use the cash at bank. So if the business has cash in the bank account, there is ways of using that cash to pay the vendor. Plus, we can use vendor finance, where we buy the business now, but we pay for it later. And this is a very
Ah,
big concept. We do it with other sort of household items, don't we? In the UK, people often buy their sofas, their couches, and their TVs. They
buy now,
buy
pay later.
take it home, and they pay over the next 2 or 3 years. And we can
Mhm.
do that with business as well.
Wow. So it doesn't sound like you're having to go to the traditional bank, prove that you don't need the money, have high credit scores and a lot of down payment just to get in the door. It sounds like there's a lot of alternative investors that are
Correct.
looking to provide you the money for a, fairly reasonable, or would you say that these are a little bit on the higher sides, interest rates and
Yeah.
payment
Yeah, the interest rate can be a little bit higher, but the deals can be done faster.
Mhm.
And I'd rather pay a higher interest rate and get the deal done than pay a lower interest rate with what we call a high street bank. So one of
Right.
these banks that you see in your town, where it might take them 6 months to reach a decision, and quite often
Right.
banks are slow.
And just because you get financing doesn't mean you're married to that financing for the rest of your career with that company. I mean, it could be short term. It could be a couple of years to get everything rolling and then you refinance it or pay it off.
Yeah, so all of my clients are encouraged to, when they've got to their group of businesses to a certain size, to refinance the whole lot, because now
Nice.
they're refinancing a big business, where before they were financing little businesses. Put all
Sure.
the businesses together, we've now got a big business, refinance the big business, and sometimes that allows us to release cash that we can pay to ourselves as well.
Love it. So then thinking about this, I'm owning all these things and I'm buying these businesses, I'm getting them financed, I'm making the deals happen. Does this mean I'm working in each one of these companies?
Oh, that's the last thing you want to do. No, we We are not buying a job. We are buying a business.
Yay.
So what we're looking for are businesses of a certain size where when we take the vendor out, because when we bought it from them, they're going to disappear. They're going to go off on the world cruise. So they're going to disappear.
Yep.
We want a business that is of a certain size that when we take the owner out, the business just carries on as normal. So it's going to have a manager or a management team in place. And quite often, they're the businesses that have annual revenues of $1 million plus.
Love
Now,
it.
when people start off thinking about buying a business, they're thinking, oh, a business that has revenues maybe of $200,000 or $300,000. And I say
Smaller
that's
companies.
too small. It's too small. Too small.
Because you have to work in it. It's not enough
Exactly.
to pay the employees, so you end up having to work in it. I love it that
Absolutely.
you step it up to
Yeah.
companies that are already operating.
And it's easier to buy those businesses. They're better businesses. Why are they better businesses? Because they've already broken the $1 million mark. They've done something right. With a
Yes.
business that's doing $100,000, it hasn't quite got there yet. Yeah, we
Yeah.
want to buy businesses that are successful.
Love it. Love it. So now you're talking about these fantastic ideas. You've got me excited going into the idea of buying other businesses that are already existing that could complement what I'm already doing. Or if I don't have a company of my own, I can go out and start a business that doesn't require a lot of my blood, sweat, and tears. So you mentioned these because you're in the UK. Are there opportunities like this in the US and in Canada
More.
and in other places?
I, I wish I lived in the US. The opportunities are 10 times more than they are in the UK. We're a very, very small country, extremely small. We can fit our entire country into Kansas, you know. So,
Okay.
so that's how small we are. But you know, the opportunities in the US are incredible. And all it takes is someone to get knowledgeable, and go for it, and just go
Under,
out and do it. There's nothing to stop you apart from yourself.
and I think this is almost for many of us the 90s were the time of house flippings, or the early 2000s were the time of house flippings. You go buy a house, you take it, you do a couple of repairs, you put a band-aid on it, and you sell it back out again. I think we're coming into that kind of time horizon where buying businesses, because the population of owners are aging out, even
Yes.
in the service firm space and in the small manufacturing spaces. There's still a lot of opportunity, and I think this is a great time to really consider this as a way to build your portfolio of businesses.
Oh, absolutely. And we have a worldwide recession,
Mm,
and this is the opportunity. When you have periods of economic turbulence and uncertainty, you have more people wanting to sell. So this is a
yeah.
buyer's market. Don't miss it.
Ah,
The next 2 to 3 years is an incredible market.
and here with a recession, you would get the typical investing model of buy low and hopefully
Absolutely.
hold on to it or sell high later on with it.
Yeah.
So I love
Absolutely.
that. So there's an urgency now to see the opportunity. And I think what an amazing tool for so many people that want to avoid those first 5 years of tremendous stress. That's where you're working, 80
Yeah.
hours a week and not getting paid for it. You've got the worst boss in the world, demanding that you do all this stuff. Well, you can shortcut that with this
Yeah.
kind of model.
And the majority of businesses fail in the first 5 years. They don't succeed. And what you want to be doing is buying a business that's been running for at least 5 years, that's doing $1 million plus, has a management team in place, because you do not want to be there every day. You don't want to be
No.
there at all, really. You just want
Wow.
the management reports every month that show you how much money that business is making. You need access to the bank account so that you can pay yourself every month. And what more can you want? That's perfect. And you do that 2 times, 3 times, 4 times, 5 times, you've suddenly got yourself quite an empire.
Wow. All right, Jonathan, this sounds so fantastic and so amazing as an opportunity, but something keeps coming back and telling me it's not as easy as it sounds. Come on, is it really this easy that we can go in and buy companies like this?
It's straightforward. It's not easy, it's straightforward. So the
Okay.
process is straightforward, and anyone can understand the process pretty quickly. I mean, we've only been talking about it for half an hour, but with a little bit more time, I think anyone could understand the process. But then you've got to put it into practice. And I think for
Right.
many people, taking action, implementation, that's the harder part. But it's not something that you do all by yourself. You have that CPA, you have that attorney, you have those people on what we call your deal team. And having that
Mm,
deal team around you is always going to help you avoid mistakes as well, because there are things that you can
sure.
get wrong. Like with anything, like with real estate, you can get things wrong. So you need some guidance to make sure you don't make those mistakes. So yes, anyone can do this who sets their mind to do it, and anyone who's prepared to put the effort in, because there's going to be some effort along the way too. And that might put some people off. Some people don't want to put the effort in. But if you put the effort in, you get the reward.
Perfect. So one final question for you. Can anybody do this? Is there a certain type of person, or what could the person listening to this do to
Mm.
prepare themselves so they'd be a better candidate to buy companies?
Okay. I have an answer that may not be the answer that you're expecting.
Okay.
I think that the quality of the best business buyers is curiosity. They're curious. They ask questions. They want to understand what the business owner's position is. Why do they want to sell? What's their urgency to sell? When do they want to sell? They're curious. They ask questions and they listen. They listen more than they talk.
Mm,
And they're good people. They can build rapport and relationships. So these are all the soft skills. The hard skills, the numbers and the legal things, that's done by other people. As a business buyer, we're finding the deals, we're talking to people, we're negotiating, we're understanding what they want to achieve, helping solve that problem, helping them get what they want, which might be, I want to sell my business in the next 12 weeks. I want to retire. I want to give someone the
I'm
keys.
done.
Help me do it. How do we solve that problem? The best business buyers are problem solvers.
Oh, wow. So it really can be anything. You didn't say, oh, you've got to have the 800 credit score and you've got to have this much in income and, be at the right place at the right time and all those kind of things. It's just the curiosity and the problem solver that you can do, because you want to create a win-win situation, right? This
Yeah,
person wants to win. You're not going to pull it out from underneath them and walk
you
away,
can't. I mean,
twisting your
yeah,
mustache as
yeah. No, you can't. I mean, it's a legal agreement between two adults, so
right.
no one's forcing anyone to do anything. Uh, but that means that everyone's got to be happy, and the seller's not going to sell it if they're not happy, and you're not going to buy it if you're not happy. So everyone needs to be happy.
Love it. Love it. Well, what a fantastic concept of growing your own empire by buying other companies, and that you don't have to build them up yourself on your back and your sweat and blood and tears and all your savings. There's other ways of doing it. So, Jonathan, where can listeners find out more about you and learning some of these ideas that you've shared with us today?
So there are three places. The first is LinkedIn. So I'm very active on the LinkedIn platform. So I invite people to find me, Jonathan J, on LinkedIn, and send me a connection request. The second is on YouTube. I've got a very popular YouTube channel. Again, you search YouTube for Jonathan J, and you'll find my smiling face on there. And the third place is on my website, which is dealmakers.co.uk. Dealmakers.co, which is co.uk.
Awesome. Well, we will have all of that in the podcast notes, and so that way listeners can find you. What I'm floored at how interesting that this concept is, and how straightforward, as you mentioned. You still got to put a little sweat labor in there and find the deals and make it happen and build a team around you and have deal makers on your team so that you can help get the best solution for everybody, but it's possible. It's
Yeah,
totally
yeah.
possible.
So buying a business is a very confusing, complicated, big subject. And what I do is I break it down into bite-sized chunks that anyone can understand, because if you understand it, you can do it.
Love it. Love it. And what a perfect time as we're facing and starting to wind into a recessionary time. Nobody likes it. It's hard, it struggles, but that's where winners survive, right? That's where opportunity comes out of the ashes of trouble. And here we go. So perfect timing on this. All right, listeners. Gosh, I hope you got a couple of ideas today that you can put into your business or even start a new business that will help you become more profitable. And we all know cash flow is king. All right, so now more than ever, it's important to be focusing on growing your business and its revenue. Don't forget to download my book and the 12 strategies that can dramatically increase your revenue, profit, and the value of your company without having to pay for advertising or additional marketing. Go pick up your copy at trajectoryprofits.com/book-download. And Jonathan and I would love to hear your comments on these ideas. What kind of business are you thinking you want to buy? And where are you going to buy it? Comment in the show comments, and Jonathan and I will respond back. Give us any questions or ideas or directions you're going in. We'd love to hear them. And while you're at it, please subscribe to today's show so you can get information on next week's show. And as always, you can catch Profit with a Plan on any of your favorite podcast players. And we're looking forward to more great profitable information on next week's show. So until then, make your plans and profit with them. Thanks so much, Jonathan.
Thank you very much.